Phoebe. Thanks for joining us today on The Raise. It's really great to have you here. For those of you who haven't met Phoebe, I feel like most people in the startup community have. She's the general partner at Blackbird Aotearoa. So it's wonderful to have you on the podcast today. Thanks for coming.
Kia ora, Ryan. Good to be speaking with you.
I think just to kick things off easily, for those who are less familiar with Blackbird, could you just give us a rundown on how it started and then also how it made its way to New Zealand?
Yeah, for sure. Okay, so cast your mind back around 12 years, and in Australia, there had been a number of really successful software companies like Atlassian, Aconex, Campaign Monitor, but their VCs were all Silicon Valley VCs. So the best investors in Australian companies were all US based. And the reason was that there just weren't any venture capital funds in Australia that had been successful. And a couple of people, Rick and Nikki, who were the founders of Blackbird, had been founders themselves. They'd seen the best VC funds operate in Silicon Valley, and they moved home to Sydney, wanted to build their lives and careers there, and just felt there must be an opportunity to build something homegrown and invest in the next wave of Australian startups. So back in 2012, they raised Blackbird's first fund. It actually took them about 2 years and 500 coffee dates to get 100 people to say yes. And those 100 people were mostly tech operators themselves. They couldn't convince any kind of institutional capital to try out this Australian venture capital thing. That fund that they raised has gone on to invest in the first rounds of Canva, Safety Culture, Culture Amp, and a number of other companies, and is one of the all-time greatest VC funds globally. So those first believers are really in their stripes. That was the beginning of Blackbird, and if you think about Blackbird Aotearoa, where I now spend my time and growing the team here, in some ways, Sam Wong, who brought Blackbird to New Zealand back in 2019, she saw the same opportunity that Rick and Nikki saw in Australia, but in New Zealand. And so she moved, she saw this opportunity and she felt it was so strong that she moved her 5-month-old baby and her partner, who had no New Zealand connection, to Auckland to establish a specific New Zealand fund for Blackbird. And that opportunity was, so many high quality founders, people who tended to be first time founders, had brilliant ideas and realized that tech startups were the way to make their ideas a reality, but lacked a breadth of choice around who their investor was going to be, and also lacked options that were really, strong founder-friendly terms at the early stages of the venture journey, which set those companies up for a long venture journey into US markets and US investors over time. And so that was the opportunity for Blackbird. We started here with a dedicated New Zealand fund in 2020. I joined in March 2021 and recently took over the team in the office here from Sam, who is heading back to Sydney.
Yeah, that's such an exciting story from Blackbird, and such a huge success in like the first fund raised. There's obviously some really well recognized companies in that portfolio as well, which is amazing. Tell us a little bit about your journey, Phoebe. Let's cast back maybe before you joined Blackbird. What were you doing then?
Yeah, so before I joined Blackbird in New Zealand, I was a growth equity investor, which meant that I was working on investing in companies that were had about $20 million in revenue and were headed towards public markets themselves. I was working at a fund called Generation, which was started by Al Gore. And so all of the companies we were investing in had a sustainability angle of some sort across everything from electric mobility and plant-based meat through to enterprise efficiency with companies like Asana, Toast, Gusto, things like that. And so that was my first investing job. I learned how to bring a real analytical lens to companies and learned how companies look when they grow up at that sort of stage. But when I moved to Blackbird, I moved back from London to New Zealand. I was on the job hunt, and Blackbird New Zealand was pretty much my dream role. I managed to land one with Sam and the team here. That was the first time I'd done any pre-seed investing, so investing in companies that are just often ideas or are two people in the metaphorical garage. And so it was a huge learning curve for me to come and start to understand the job of an early stage investor, which is, much less about the head, much more about the heart and understanding the people in front of you and the potential that they have to go and create something from nothing. And I've learned a lot about that in the last 3 years with Blackbird.
Yeah, that's really interesting. Obviously, you've got deep experience in the investing space. I love the the point around more about the heart rather than the head, one of the questions that came to mind is, what do you find different when you actually analyze what you are looking for in a pre-seed founder? Obviously, there's not as much to go by, certainly, than a company that's generating 20 million.
Yeah, it's so fascinating because the world I came from, so before even Generation, I was working at Bain and Company as a consultant, and the investing work I did there was working with private equity funds who were looking at buying really big companies and basically bidding for them to own and switch out management and lever up the company to the hilt with debt and then sell it on again, which is a very different style of investing to what I do now. And so for me, it's personally been a journey away from the analytical, having a lot of data to go on, being able to talk to customers, being able to analyze customer cohorts, all that good stuff, through to having, as I say, like in front of you, a person and an idea. And the kinds of things that we look at and really value at Blackbird are things that are much more qualitative, really. It's wanting to understand why this person is dedicated to building something out of nothing. What is it, the problem that they've landed on, which they're so obsessed by that they will do the unreasonable thing, which is to start a company off their own bat and, get on the roller coaster that is startups in order to solve. Have they done a lot with a little? So are they someone who is incredibly resourceful and, a learn-it-all, not a know-it-all? Are they someone who other people will want to work for? Can they tell a great story about what they're doing? Because that's going to be so important as they raise money, as they attract new hires. And so these are elements that I'd never really thought about when I was a growth equity investor. And I'm kind of embarrassed as like how little we focused on the team when we were making those very big investment decisions, because I suppose what I now really believe after having spent time investing myself at Blackbird, but also watching our later stage portfolio mature, is that the best companies in the world are founder-led, and people ultimately are the company. And so you really have to start with the people in front of you and understanding them as individuals and them as leaders as well.
Yeah, that's so interesting. I guess the pattern matching is a term often used in investing, and I guess the patterns must just be totally different, but no doubt they're still there. Otherwise, Blackbird wouldn't be able to be so successful so consistently. Tell us a little bit about Blackbird's funds in New Zealand. When did that kick off, and then also what sort of companies have you invested in so far?
Okay, so Blackbird New Zealand, we have a portfolio that's around 30 companies, and we've invested nearly $150 million in those companies. Our portfolio in New Zealand skews a little bit more heavily towards deep tech than software relative to the Australian portfolio. So in New Zealand, we're about 50-50. On the software side, we have companies like Partly, First AML, Care Patron, Tracksuit, Cotis. And on the deep tech side, companies like Halter, Foundry Lab, OpenStar. And we see both as real strengths in New Zealand. I think something I would say that's very different about New Zealand relative to Australia is we see so many first-time founders in New Zealand, people who haven't necessarily worked for a startup or worked in a high-growth tech company before, landing on the realization that the best way to solve the big problem they're obsessed with is to build a startup around it. And so we have more people in New Zealand who are building startups for the right reasons, like they land on a problem and really want to make the world better in their own way, and then they build a startup around it. Whereas in my view, sometimes in Australia, you get a few more people who are like, I should do a startup and kind of, perhaps start with a different motivation. I think the former, the people who are doing their life's work in startup happens to be the way to achieve it, tend to be grittier, more resilient, more resourceful. And that's one of the real strengths of founders in our portfolio in New Zealand.
Yeah, nice. That's really interesting. I didn't actually know about the split between software and deep tech. Deep tech is something that keeps coming up to me in the last few weeks, and I've been looking into it quite a bit more than usual. How do you think that your investing approach needs to change when you think of a deep tech opportunity as opposed to a software opportunity?
Yeah, okay. So I do think about deep tech and software somewhat differently. There are things that they have in common, right? The first is a really deep understanding of a customer problem. And that's something that you don't often get in deep tech founders. You have people who are like, they've got a learned insight that they might have come across through academic research or through some career research, and they say, I can go build a better thing because I've got some idea about how something should be done differently. So it could be, I've got a way to deliver zero carbon concrete, or I've got an idea about how we can approach nuclear fusion in a different way because of the particular research angle that I've taken, and I can see an application there. But it takes a special person to already at the start of that process be thinking about who's going to pay for the thing that they're building. And it's really important to be commercially minded up front. And I'd say something that separates the best deep tech founders from the rest is an ability early on to really think about the product they're building, not just the technology. And, and vice versa. There are a lot of incredible technical founders who never make that leap. And so that's something I really look for early on in founders. Another is the ability to tell a good story, because I think if you're a software founder at the pre-seed, you may not have any customers, you may not have any revenue, and you've definitely got to spin a story about what you're going to go and do and why it's going to be so valuable and fresh and different and people need it. But pretty soon you have numbers that tell the story for you and numbers that help people believe. And so if things are going well, you don't need to be an exceptional storyteller to keep riding the wave of momentum, to raise money, to attract hires. On the deep tech side, you could go 5 or 7 years with no revenue. And you have to, to get there and continue to meet the technical milestones, you have to raise sometimes hundreds of millions of dollars. And so the bar on storytelling and, to employees, to investors is so high. And it's, again, something that I really look for in deep tech founders. So I'd say the scrutiny or the bar to get investment as a deep tech founder is a lot higher, because you have to sell a belief for so much longer.
Yeah, everyone loves a good startup story. And I think the interesting thing with deep tech is, as you touched on, there's more like technical milestones that you need to look at. Like, I think, as you said, it can be 5 to 7 years before they achieve revenue, as opposed to a software company where, depending on when they're able to launch their product or what stage they've been invested at, they might be already generating revenue or just about to. How do you make sure that these deep tech companies are on track as they are going through that journey within your portfolio and looking to raise additional capital?
One approach that we take when we first invest is to believe that there is no technical risk. And so if you put aside the idea that the thing can be built, as long as it doesn't violate the laws of biology, physics, or chemistry, believe that it can be solved. And you focus just on, can this team do it? Can they attract the people to do it? Can they continue raising the money to do it? That's actually really how we look at sort of pre-seed and seed investing in deep tech. So in a sense, we believe that all technical problems are soluble. And I think that makes us more courageous than many other investors, and has meant that we've invested in things like PsiQuantum, which is a quantum computing company in Australia, in Zoox, which is one of the first robo-taxi companies that sold to Amazon, and has allowed us to take a leap of faith into something that sounds like science fiction. In terms of milestones along the way, so in some cases, it's really clear from the start what the pieces of the puzzle will be to commercialization. So for a novel medtech device or a novel pharmaceutical or something that's a really well understood and trodden set of steps that need to happen from animal trials to human trials and regulatory approval. And so in some cases, it's very clear. In others, the roadmap actually evolves massively along the way, depending on the results of the first pieces of the puzzle. So it's a little hard to say, but what I'd come back to is, in all cases with early stage investing, you are predominantly focused on the people, because it's impossible to say at the start what the steps will be, all the twists and turns that are to come. And at the end of the day, we're investing in people who we think can navigate those twists and turns.
Yeah, nice. As you said, it comes back to that qualitative component as well. I really loved the taking a leap of faith into something that sounds like science fiction. What a soundbite. That's awesome. I know, the tech scene in Australia and New Zealand has been getting really supercharged, I suppose, over the past 5 years, particularly since 2019. Injection of cheaper cash, I think, definitely fueled a lot of capital raising. No doubt that's helped you to see a lot of change in the time that you've been with Blackbird. What has changed in the VC world over the past 3 years, and what's still the same?
I'd say what's still the same is founders in New Zealand coming across problems through their life or family experiences, wanting to build something in response to a problem that they see, and using startups as a way to do that. And so this kind of like thinking from first principles about why this should be a technology company and why it should receive venture backing, and then moving really efficiently with the money that they raise. I think those are all features of New Zealand founders. The dark side to those features relative to other places or other cultures is that perhaps we're not ambitious enough, or don't move fast enough, or set the bar high enough for what can be achieved. I think a classic example of that is Craig from Halter, having the skills to solve a difficult problem that he'd learned. He learned those skills from engineering school, from working at Rocket Lab with Peter Beck, and seeing how you could, with the right team, no problem is insoluble. And combining that with his life experience of seeing his parents as dairy farmers battle away, work 100-hour weeks without real assistance from technology, and thinking there must be a better way. So I think that kind of story we'll continue to see. Basically, New Zealand is thinking, I think it can be done a better way, why not me? And so another great example would be Ratu from OpenStar, who is building a nuclear fusion company. We don't have a lot of nuclear expertise in New Zealand, far from it, but his learned experience in superconducting magnets exposed this opportunity to bring a different approach to nuclear fusion. And he sort of said, why shouldn't I give it a go? So I love that attitude. It's, people really building companies for the right reasons. Those missions are so magnetic to talent, and that ultimately is what you have to do as an early stage founder, is tell the story that attracts the people, and then the people build your company. So I think that hasn't changed, and I hope that will continue. What has changed? So one thing that has changed is we're starting to get second and third generation founders, people who've founded a business, exited it, and coming back for more. We are getting talent recycling in the same way. So people have had great experiences at Xero or Crimson Education or Rocket Lab, Vend, and are moving into really senior experienced operating roles or are founding companies. So we're just starting to get that flywheel effect happening in New Zealand. That is only going to continue. And I think capital has been massively important. When Blackbird arrived in New Zealand at a time when there was more capital starting to flow through the ecosystem. Big part of that was through the New Zealand government's Elevate program, which supported a few venture capital funds here to get to scale, and has introduced more competition in the ecosystem, which was really needed. I think we're not yet saturated. There still aren't that many VC funds in New Zealand that are investing in the early stages, but it feels like there's enough capital for the best ideas to get funding. And so that is just feeding the flywheel. More people will try founding companies, more people will get employed by startups, will draw people in from overseas, from other industries, and the whole ecosystem will grow. I have the feeling our ecosystem could be 10 times larger today if we had more of all of the above. And so I'm just excited to see it grow and gain steam. I think it will do, especially if we have some exits or the status of startups rises, because it's still an unpopular thing to do, to go work at a startup. Very different to in San Francisco.
Yeah, that's a good point around it being like not necessarily the chosen path people might take or something that people will readily consider, but more maybe opportunity that might fall into someone's lap. It's really exciting to see how fast tech is growing in New Zealand. I may be incorrect, but I believe it's the fastest growing sector in New Zealand and will be one of the leading export earners in about the next 10 years. What's your out of 10 sort of level of confidence that we're going to achieve that?
I'm an optimist by nature as an early stage investor. I'd say it's a 9 out of 10 that will exceed expectations on the role that startups can play in New Zealand's economy. Partly we have pretty good settings at a government level now for innovation. Of course, you can quibble with individual policies, but there's definitely a posture of we need to shift the economy towards higher value industries, and tech exports being a massive opportunity. The second is that it's never been easier to start a big, influential global company from New Zealand, because distributing software, distributing your products remotely is now possible. That wasn't really possible 10 years ago. It's possible to build and maintain a remote team within New Zealand headquarters. Many go-to-market motions now don't require big sales forces on the ground. And so it's never been easier to scale a technology company from New Zealand. There's no reason you can't build one here. And so I think that plus this network effect, basically, of people getting more experience working in startups, seeing that mode of building something can work for them and founding the next thing, that groundswell will be unstoppable when it gets going.
Yeah, for sure. It's such an exciting space to be in. I feel so lucky about like the timing of even Atlas, or I suppose even Blackbird, just being able to work in a space when it's undertaking that growth and being part of the ecosystem, the energy. There's no other sector I'd want to be a part of. Let's move to the Blackbird lunchroom. What sort of conversations are you having right now, day to day? Obviously, there's a bunch of change going on in the industry, AI being the most obvious that comes to mind. What are you guys talking about over your lunch?
Okay, so at Blackbird in the Auckland office, we have lunch together once a week, but more often than that, casually. I think like any business, what we talk about over lunch is the same. It's our customers who are founders and startups. It's our products. So our investment process, the events that we might be running, and it's our people. We talk about each other. We have 3 new team members out of a team of 7, and a 4th actually who joined a few months ago. So more than half of our current team joined in the last 6 months. So we're still getting to know each other as well. Maybe an example from yesterday, I had a long board meeting in the morning and came back to the office after that. And so I was keen to debrief the team on the update from the company and some reflections on, what we can do to help them, what we can be doing better. So that's a typical lunchtime conversation.
Yeah, nice. And I think that you touched on events during your answer as well. I know Blackbird has an event coming up soon. I thought, is now the right time to just drop that, or do you not have a date yet?
Sunrise?
Yes.
Yes, of course. Yeah, okay. So I'm really excited to announce that Sunrise is going to be hitting Wellington, Te Whanganui-a-Tara, in November, on November 26th. Would love to see you all there. So this is a special moment for Sunrise Aotearoa. We're heading out of Auckland to Wellington and have a really exciting venue lined up and starting to secure our lead speakers as well. So we'll be sharing more about that probably in the next month, but mark your calendars, 26th of November. I think one thing that's been really cool, we set out on a scouting mission a couple of weeks back to engage with the local tech community in Wellington and to do some snooping around of the venues. And what I love about Wellington is when you kind of almost like put something out there for the community, they just grab it with both hands, put their arms around it, and want to make it a success. So I've got really high hopes. I think it is going to be pretty special. And we're hoping the vibe will be a little bit more of a South by Southwest type vibe, where you can go to different stages, depending on the sort of priorities that you have as an attendee, whether you're a founder, someone working for startups, interested in working for startups in the future, you'll have a different experience.
Yeah, nice. You definitely picked the best city to run it. So I'm really looking forward to that personally. I may be a little bit biased, but yeah, I think it's going to be a blast. Can't wait to go. And neither can the rest of the Atlas team. I read a really interesting article published on the Blackbird website a week ago or something along those lines. And really it was about the future of vertical SaaS being disrupted by AI. And correct me if I'm wrong, but broadly summarizing it, it was really about how a lot of the previous wins for vertical SaaS and value added to the customer was, changing something from a spreadsheet to a tool that you can now use and increasing productivity by 10%. Whereas now with AI, the opportunity becomes, replace that the person executing that task altogether, or, more fundamentally improve the way that task is completed, resulting in 80, 90% productivity gains, which obviously creates a way bigger and more valuable opportunity. What's your take on that article, and especially in a New Zealand context?
Yeah, it's an awesome article, so I'd recommend people read it on our blog. From SaaS to SaaS, software SaaS. AI as a service. Yeah. Okay, so the way I think about this is that there are sort of two things happening in SaaS. One is that existing horizontal platforms or platforms that do a lot of things with a lot of features. So I have companies in mind here like CarePatron, an all-in-one workspace to manage your health practice from. It means you can, book client appointments, you can take notes during consultations, you can bill your clients, manage your team scheduling, things like that. It's a product with a lot of surface area. It does a lot of things. Companies like that benefit from the AI wave in a certain way, which is that they can now embed AI functionality in this broader product that help automate some of the busy work or the unpleasant work that comes with a professional job. So in the case of CarePatron, they have an AI scribe that will note down your clinical notes as you have a consult. It'll summarize them and you can save it to the client note. That's one opportunity for software products, which is embed AI-enabled features. The other thing that's relevant to all software companies is building with AI-assisted tools like Copilot to help you be more productive in your software teams. The second kind of company, which the article focuses more on, is an opportunity to do something relatively simple for a user, but incredibly impactful. So you talked about the productivity gain. It's usually a task that the user doesn't want to do, doesn't get energy out of, and it massively speeds up that part of their day. So if you take a company like Heidi Health, which is also in our portfolio, they just do the AI scribe piece of what I described is embedded in CarePatron's product. And they decided just to go after that and to build the best possible AI support scribe for, in this case, GPs. And they've had huge adoption just of that tool. It's HIPAA compliant, so it's sort of data secure for the medical use that it's being used for. And so I'd say that's a separate kind of opportunity where previously a white collar worker like a doctor, we have other examples in our portfolio selling to marketers, to lawyers, those kinds of people weren't on the hunt for productivity tools or productivity point solutions that could help them automate these parts of their work. They were sort of like takers of software, not lookers for software. And what's largely driving the adoption of that second kind of tool, that AI-enabled point solution, let's say, is a shift in how people are experimenting with tools. So thanks to ChatGPT and things like Meta AI that are now embedded in WhatsApp, individual users know that there are AI that can help them automate parts of their work they don't like doing. So it could be, generating first drafts of things, throwing spitballs around in terms of brand imagery or campaign imagery. It could be flagging in a document the important things that they need to look at. So shortcutting the bits of work that aren't really maximizing their skills. Those things previously, if there was software that their company already paid for that did that stuff, they'd use it. Now they go looking for it and they're willing to start experimenting with things, put that cost on their credit card, start to make it part of their workflow in a way where they previously wouldn't have at all. So it's, in my mind, a separate kind of company. All software companies should be building with AI. They're building AI-enabled features. If they have existing distribution, it just makes their product better. And then there's a whole opportunity for workflow wrappers around GPTs, which enable a whole new set of companies to be built. The question is, for those companies, how do you translate fantastic adoption for a single piece of the workflow or a single use case into a really sticky, broad moat that can keep the user in your tool for longer, make it habitual and sort of broaden out the offering that you have so that you're not easy to replicate, because at the moment it is relatively easy to build these tools.
Yeah, for sure. There's definitely, to that last point, there's definitely like really low barriers to entry at the moment. And I think therefore like creating a competitive advantage is super difficult. It will be really interesting to see how the ecosystem develops around, ChatGPT is one example, in the same way that, you can build things on Salesforce or in Shopify and like sort of exist within that ecosystem. I don't know. I think those are really interesting businesses with their own sets of risks, but also their own sets of obviously readily available or, audiences that they can target as well. So it's a really interesting space for sure. In terms of investor relations, it's one thing to invest and raise capital or put capital into a company, but it's another to really be part of their journey, be able to guide them, and also just get a really clear understanding of how they're going at any given time. What does investor relations mean to you, and how do you think founders can cultivate strong relationships with their investors?
Yeah, investor relations is such a good topic to dive into. I'm glad you asked about it. I think it's such an interesting dance, investor relations, because on the one hand, you have the founder, the company itself, who I consider as an investor my customer and someone that I'm here to serve. But on the other hand, as an investor, I'm always thinking about, do I want to invest more in this company? Will I invest at the next round? Will I try and lead the next round? And so there's this sort of dance where I'm both supporting and scrutinizing, which is quite a strange role to play. And I think founders feel the inverse of that, of they're both performing and selling in some sense, but also need to be vulnerable and honest with how things are going. Otherwise, they can't get the support that they really need. And so the best founders strike this balance well, where they are building trust, and trust comes from regular communications, transparent communications, context sharing, but not too much sharing, if that makes sense. And it's a really fine balance. I think the best kind of investor relations look like structured monthly readouts on what's going well in the business. These could range from almost like a journal entry. Some founders like to write a couple of pages about what's going on in the business. Others prefer to stick to a standard set of metrics with some commentary overlaid, whatever works for the person. And from a board perspective, catching up every 3 months with a much deeper dive into what's going on in the last quarter and what's sort of coming ahead in the next quarter is a longer version of that. Those are the documents. And I think the right way to think about those is, in some sense, it could be seen as homework and something that's for the investors. But the right way to think about it is a prompt and a forcing function to reflect on what's going on in the business, and use it as, treat yourself as much as the customer of that as your investors. And I think you'll be in the right spot. With the board conversations, the best of these are sent out a week in advance so that there's ample time for pre-read of the context sharing, which is critical, because if you think about your board members, they are, for you, the movie of your company is a long and continuous feature film. And for the investor, they get to see, 30-second clips at random intervals through the film. And so you have to fill in the gaps. And your first job is to share the context so that you can get really good input and your investor's not left wondering about what's going on. So that's part of the trust building. And the discussion itself, the best of these are, okay, everyone's read the papers, everyone understands what's going on in the business. Maybe there's a short amount of time for Q&A to really make sure that's all well understood in the meeting. But the bulk of the meeting is spent discussing 2 or 3 questions that the CEO and the team are grappling with. Often these are things around how to structure the organization, which roles to hire. It could be investment decisions. Do we go harder or faster? Are we heading towards a successful fundraise, which will allow us to stay alive? Are we heading towards profitability, which will allow us to stay alive in a different way? These sort of bigger strategic decisions that often come down to a combination of financial performance, investment decisions. Yeah, and I think the thing that matters with investor relations, as I say, is trust is built in drops and lost in buckets, and you have to build that trust over time between you. It's obviously a two-way street. It's a relationship from founder to investor. But every time you send a structured update, every time you have a conversation that you're well prepared for, you have an opportunity to get something out of that interaction, to get help. In exchange for giving that context, you get hopefully really useful help back. And it is one of those things where the more you put in, the more you will get out. And if you're not getting good stuff from your investors, even though you're giving them a lot to work with, then change who your advisors are, change your board composition, get some different perspectives on there. I think the other thing that I often see is founders expect, sort of thinking like they're at the school principal's office, and it's not for them, it's for the person on the other side of the table. But all of these interactions should be as much useful for you as it is useful for your investors. So get out what you need as well as giving them what they want.
Yeah, yeah, it's all about fostering a relationship, right, where you mutually can help, and one part of that's through capital, and other parts through advice and lessons learned from other startups and business experience as well. Um, what do you think? Like, if you're going to give advice to a founder, what do you think that they should do 20% more of, and what do you think they should do 20% less of?
Yeah, I think 20% more talking to customers and really understanding what are the quiet truths that they may not know about how the product's being used, the problems they have, or other things that they could be building for customers. So 20% more of the time with customers. And then 20% less of the time talking to investors. I think if you get the first thing right and you build something that customers love and they're ripping it out of your hands, then the fundraising piece really takes care of itself. And the less you think about that, the better.
Yeah, that's actually a really great answer. 20% less time speaking to investors.
Correct.
Yeah, that's really interesting, and yeah, I totally agree. Like at the end of the day, it all just comes down to solving a customer problem really well, and the best way you're going to understand that problem, obviously, is talking to customers. So that makes total sense. In terms of founding teams, what do you think sort of separates the superstar founding teams from the rest? You wrote an article, I think it was about this time last year, maybe, called "It's Not You, It's Me," and you could maybe broadly summarize that article in your answer as well. But what's changed since you wrote that, and what helps separate those superstar founding teams from the rest?
Mm. Yeah, so the premise of the article that I wrote and published a blog about called It's Not You, It's Me, the starting point for that was wanting to explain why there are many businesses that can be fantastic businesses but are not a good fit for venture capital, and especially Blackbird's particular flavor of venture capital, which is on the most bold and the very riskiest novel ideas, which we believe can have the potential to pay off massively at the other end, but many of whom will fail. And so I wanted to define what I think characterizes a venture backable business so that I could explain why, in some cases I might meet you, might really understand what you're working on and be really impressed in many ways, but not think it's a good fit for our style of investing. So if we clear the bar of this is a venture backable idea, meaning that it's a novel idea based on a technology development that could be an engineering development in hardware, or it could be a novel piece of software that does something fresh and different for a customer. And you can see a path over 5 or 10 years to a business that has really high gross margins or is a very profitable business model, and has the potential over that time to generate money so that you can invest in broadening the product moat and building something that other people find really hard to replicate. If we clear that hurdle and it looks like a venture backable model, then my attention flips totally to understanding the people across the table from me, what is leading them to be obsessed with the problem that they're working on, how did they come across the insight, why are they working on this and not 10 other ideas that they could be working on instead, why are they doing this and not having an easier life, getting paid more to do something else? Is this someone who thinks deeply and can go all the way down the idea maze about something? So, not just understand something at a surface level, but ask why, and have a lot of ideas about not only what they're building right now, but what the other chapters to the product and, the other customer problems they want to solve are. Someone who's opinionated about what they want to do, but listens and holds those opinions lightly. I think I've just learned so much after even 3 years of working with early stage founders about almost the red flags or things that don't bode well. So there are so many, but some examples would be founders who are not full-time on the idea yet, founders who are building, say, a software product, but they're outsourcing the build of that software product. It's an okay way to get started, but I would not invest in a team that didn't have the existing capability to build the product itself, because you need to have those feedback loops between customer feedback and the product and engineering team so tight that you can iterate really quickly. People who are easily swayed by the winds of opinion. It's so hard to you get pummeled with advice as a founder, and you need to be able to navigate lots of people's opinions and stay true to your own beliefs while also being a sponge for new ideas and evolving how you think about things. So those are some of the characteristics that I look for in founders.
Yeah, nice. And what would be like sort of a high level checklist of what founders already need to have achieved if they come to you asking for
Yeah.
pre-seed or seed funding?
Yeah, it's an interesting question because I think it so depends on the business that you're building. So I'd almost put a spectrum in place between a consumer model distribution and a really novel piece of deep tech. So if you're building a consumer app, by the time you raise money, ideally you already have customers who are paying or customers who will crowdfund your thing, and that you should very quickly be able to test an idea and get a lot of customer feedback from it. So traction in the sense of people are using something, they love it, they may be paying for it, or they really want it to exist and will prepay for it in your crowdfunding. That's the kind of thing I'd be looking for in a consumer model. And we don't do that much investing in consumer models. It's hard to build a really big business in that in a market where differentiation comes predominantly through brand and marketing rather than a massively 10x better product. On the deep tech side, I wouldn't expect you necessarily to have a working prototype or any money at all, but they are much more focused on is the thing you're building solving a really big problem? Is it a painful problem for someone who will pay a lot once it's a reality? Can you talk about not just the technical issues of what you're solving today, but why the product, like how the product will exist in the future and how the unit economics will work at scale and why it makes sense to be on a venture journey that might last 10 years for that idea. For a SaaS company, especially now with the ability to build products relatively quickly for relatively low cost, I'm definitely excited to see traction in the sense of we have users using our MVP, we're getting really good feedback, we're listening to customers' feedback, we've developed a really technicolor roadmap around that feedback. These are the kind of things I'd look for even at pre-seed ideally. I think maybe just to give a couple of examples, when I met the Care Patron team who you introduced me to, Ryan, they'd already done, before raising any money, 700 interviews, and they had a working product that users were starting to use and give feedback on. So that's a fantastic moment to raise a pre-seed round where you've done that deep customer research, you really know the shape of what you want to build, you've got a team in place who can deliver an MVP and start iterating on it and making the product better. That's a great time to raise money. Another example might be Throughline, which is a solo founder that I invested in. He had a really clear idea for what he wanted to build and had kind of built a version of this in the past, which was a helpline product for any internet user in distress. If they were searching terms that suggested they were in distress or posting content that suggested they were in distress, then a pop-up could appear to point them towards a crisis helpline. Now, he needed to go find a technical co-founder, so somewhat violates what I previously said around you need to be able to have the team who can build the product in place. But I was so compelled by his connection to the problem, his depth of understanding of the helpline industry, his personal charisma, that I felt he would be able to attract a technical co-founder very quickly. And so I made a pre-seed investment in that company on the basis that they said, we think the big internet companies really need this. And now, 2 years later, that company is selling to Roblox, Google, Grammarly, and other big internet names. Moving maybe towards the sort of seed and, let's say seed stage. I think if you take a software company, again, maybe like Tracksuit, by the time they raised a seed round, they had gone from selling the idea based on some wireframes, like a PowerPoint slide pack, which was like, we're going to go build this. Would you pay for it? And how much would you pay? And, can you sign up now? And then we'll go do it. They've done that at the very earliest stages. They've built the product. They had $1 million in ARR. That's a great time to raise a seed round. Not everyone gets that start in life. But basically what you want there is to have like a more refined idea of who your customer is, who you will and won't serve, like who's a good customer, who's a bad customer, who are you focused on, where do you find more of them, what else do they want, and what else do you plan to build, and starting to show that there's value in the product. So maybe customers are paying, or they're at least using your product a lot. If it's a marketplace model, and the main thing is to get over that cold start problem, have transactions happening and that, initial signs of network effects or a viral coefficient, I'd be much more focused on adoption than I would on on monetization. So it does depend a little bit on the model that the company is building, but you're starting to see signs of product market fit, that the thing you built, people want, they're referring their friends, your cost of acquisition is going down, there's some network effects at play, things like that. And then when it comes into Series A, like, you really want to have happy paying customers who, and they're happy because they're not churning, they give you high NPS, they expand, they engage, however you measure that in your model. For a hardware company, at this point, you probably have a working prototype of some sort. Again, it totally depends on the company. But if you take a company like Halter or Vesev would be another one, you have a working prototype that a customer can look at, touch, feel, see, and wants to buy. And you have a pretty good idea of how to make the next 10 or the next 100, where you're going to do it, what they're going to cost, the path from, a relatively high cost when you first start off to a much lower cost and some really nice gross margins once you reach scale. The depth of thinking about the cost side of the equation is definitely something that's important around the Series A in a deep tier company.
Yeah, nice. There's so many great points there, and I think it lays out like a really clear sort of map and milestones for founders that are either early in their journey or later in their journey, or just thinking about getting started and getting in touch with Blackbird as well. Hey, it's been great to have you on the raise today. Just the final question now, what is your outlook in tech in New Zealand and Australia for the rest of 2024?
All right, 2024, my outlook for tech in Australia and New Zealand is very excited. It feels like the start of maybe a new cycle. We have more optimism. There are more people founding companies, going out and raising their first round. We have venture funds starting to raise their next rounds as well, next funds as well, and have dry powder to invest. We are in a nice spot as Blackbird. We're about halfway through investing our current fund, so we've still got plenty of dry powder to invest. We'll be out fundraising ourselves in the middle of next year and feeling really optimistic about our ability to keep investing in this ecosystem. We just distributed $1 billion in funds from some Canva sales to our investors. Most of them are in Australia, but they're quite happy with us at the moment. We're hoping that they'll put some of that back into our fund so we can continue to do what we love to do here.
Yeah, $1 billion distribution. That is a pretty amazing achievement. That's so cool. Hey, Phoebe, it's been so good to have you on the raise today. I've really enjoyed speaking to you. You've dropped a lot of great insights and pieces of knowledge that I've found useful, and I'm sure all of our watchers, readers, and listeners will as well. So thanks again, and have a great rest of the week.
You are welcome, Ryan. I love the raise, and I'm a big fan of what you guys are doing. So it was a pleasure.